And hi, everyone. I want to welcome you to the MIT Sloan India Speaker Series. It's our privilege to have Nikhil with us. He's the co-founder of Zerodha and True Beacon. So I just want to also tell you all a little more about Nikhil. In 2010, at the age of 23, Nikhil co-founded Zerodha with his brother Nithin. Zerodha is an online discount retail brokerage platform that has provided market access to millions of Indians by adopting a transparent, ultra-low fee model with a proprietary tech-driven strategy. With over 4 million users and valued at over $2 billion, Zerodha today facilitates orders worth $10 billion per day, accounting 18% of India's daily equity volumes. After disrupting the retail investing space, Nikhil is now on a journey to revolutionize the asset management space in India. True Beacon, which Nikhil founded in 2019, is a client-aligned asset management initiative catered to a global group of ultra-high net worth strategic investors with a disruptive zero standing fee model. So, Nikhil, before we dive in, I'd like to give you a roadmap of our conversation today. I'd like to first cover your entrepreneurial journeys at Zerodha and True Beacon, then your insights on the fintech space in India, as well as some investment advice for us young adults. And lastly, your philosophy behind how you give back and your philanthropic efforts that you've been taking part of over the last few years. We'll also leave time for audience questions in the end, and I'll share a Slido link where audience members can ask questions, which we'll get to at the end of the call. But before I get to any of this, I must bring up your hot, often non-conformist takes on Twitter. I've been through many of these and really enjoyed reading them. And a particular tweet that I found very interesting was the following. So you said that history is a set of lies agreed upon. You then gave the example of Napoleon and further said, wonder what we'll say about COVID 10 years from today. So Nikhil, my first question for you is, what do you think we'll say about COVID 10 years from today?
Well, it depends on, I'm just being candid here because, you're a closed group and you're all from a certain sect. I feel like the world might get divided into two large pockets. If that were to happen, it might well be misconstrued to being some disease that China set upon the world. There's so many different versions of it which can play out, but I guess only time will tell. Maybe 5 years from now, the narrative will be something else, and 10 years from now, the narrative will be something else. But something on those lines, yeah.
Interesting.
I would suggest for this particular conversation that we're going to have, let me do like a very small part about my journey, and maybe we can keep it more interactive and talk about the world at large today and the economy, and maybe discuss how we are viewing the world from where I sit and how you're viewing the world from where you sit, and maybe we both learn something out of it.
Yeah, absolutely. Yeah, we'd love to sort of get those sorts of questions in, as well as I think our audience members have already started asking some interesting questions. Great, but let's get to a bit of your journey also. So, I want to start with when you were 14. From your Humans of Bombay post, I saw that you dropped out of school around then to start a business of buying and selling used phones. And here you have people who have double degrees. So, how was that for you? What led you to drop out?
Yeah, see, I dropped out. There are a whole host of reasons, but the primary one, the one I tell myself, is I wasn't very good at education. If I would have continued and spent another decade studying, I don't think it would have taken me anywhere. But that's just me, right? Like somebody else might be academically gifted and they should tread a different path. When I did drop out, cell phones happened because I used to live, I don't know how many of you guys are familiar with Bangalore, but in the southern part of Bangalore, there is a college called Jain College. I used to live on the same road as that college. I didn't go there, but I lived there. So I ended up interacting with a whole bunch of people who used to go to Jane College, and they constantly bought and sold phones. And they were maybe like around my age or maybe a year or two older than I. And it started from there. I remember some friend once said, if you buy this phone, you can sell it for more because there is demand for it. So it started with one, then it became a few, then it became a dozen. And at one point, I remember as a 15-year-old guy, I had a whole bunch of people call me all day and bargain with me saying, can I have this phone for 4,000 rupees or 5,000 rupees? And interesting times. It didn't really make a lot of money, but it was something that I would say was my first attempt at running a business. And I guess you learn something from everything that you do. So I started like that. Yeah.
Interesting. And I'm guessing when that didn't work out super well, you got a lot of pressure from your parents. And so what happened next?
Yeah. So 15, 16, when I was 17, I got my first full-time job at a call center in Bangalore. There's a place, actually, it still exists. It's called 24/7 customer. So we used to call people in America and we used to sell them, accidental health insurance and AT&T telephone connections and stuff like that. My particular process was more UK focused. So I used to do the 5 p.m. to 1 a.m. shift in India. A company called Stonebridge, which was an accidental health insurance company. So again, good fun. I started that at 17. I started trading on the side because of my shift. I had the entire market hours to trade in the morning. And I probably had one of the most fun couple of years at that call center. It was not very financially good for me. I used to, when I joined, I used to get paid like 8,000 rupees or like $100 a month, and they would make you work for like 10 hours a day, 5-6 days a week to earn that. But just in terms of the friendships I created then and the people I met, and I quite cherished that time of my life. So trading kind of picked up in scale. Call center job kind of faded into the background, and maybe 2 years into it, I started managing money for some people who I used to work with at the call center, like my seniors and my manager and stuff like that.
Yeah.
And then quit and started. I was trading full time, but I quit the secondary job of the call center when I was about 19. Then me and my brother, we started a company called Kamath Associates, where we managed money for friends and family. Again, not big money, maybe like, a couple of $100,000 kind of a thing, which we took from friends and family. Kamath Associates led us to being sub-brokers because we wanted to make that brokerage margin in between. We did that for a couple of years and then became brokers. I think we decided to get a broking license in 2008, 2009. We went live in 2010. Again, 2009, 2010, great time to do anything in broking because it was right after the financial meltdown of 2008. And very little money was coming into the ecosystem. And, back in the day, like 12, 13 years ago, startups were not a thing in India. Startups were just beginning. So there were no VCs, there were no Ps, valuation and stuff like that was, like a far-fetched idea. We started it when we began to reduce cost for us because we were traders and we were paying too much. And we kind of like started a broking house to reduce the fees we paid as traders. So we began like that. And along the way, broking, to give you guys a comparison, I think we're very similar to Robinhood in many ways. We might have started before them, but structurally, the Indian ecosystem and American ecosystem is different. You can't front run here. It's illegal. So you can't make any money out of order flow. Cryptos are regulated to the point where formally you can't really service the crypto ecosystem.
Yeah.
So our business model, our way of earning revenue is very much charging that flat broking fee. We charge about 20 rupees on every trade, immaterial of how big or how large the trade is. So that's our main revenue stream.
Yeah.
And along the way,
And
we
that's
kind of
20
like,
rupees versus what were your competitors charging back then?
back then it used to be like 0.5%, 3/4 of a
Huge
percent.
difference.
Huge difference. Yeah. This is like 12 years ago, right?
Yeah.
So we started like that. Uh, we grew through word of mouth. We've never done any advertising. Our cost of customer has been zero throughout. In fact, we charge people account opening fee of like $5. So we actually earn when we acquire customers. So from the very beginning, I think we kind of like stayed true to what we wanted as a broker, because we were traders. We didn't want people selling us crap. We didn't want unnecessary marketing coming our way.
Yeah.
We didn't want somebody who sells client data. So we didn't do all of the things we didn't want done to us.
Yeah.
And over time, I think people had faith, and we built a bit of a reputation, and
Right.
things have scaled up like slowly. But we've had 2 or 3 inflection points. I think the last one being COVID. But today we do like stuff around broking. So we do broking, we do lending, which is called, I don't know how aware you guys are of the Indian ecosystem, but at the top end, you need to be a bank to lend. Peer-to-peer lending is kind of gray in India. In between, there is another way to lend called NBFC, which is
Yeah.
in between like a bank and the very basic thing. So we're an NBFC. We started TrueBeacon 2 years ago. Again, we felt the asset management ecosystem when, say, for example, Shivang or your family wants to invest into Indian markets, there were too many leakages. You would go to a private bank guy will charge you 2% to sell you a fund. The fund manager will then charge you 2% to manage your money. And then you paid that fees if you made money, did not make money. There was like a lock-in period. You can't take out your money for 2 or 3 years. Reporting was bad. You
Right.
would know what's happening with the NAV once in a month. So we fixed all that. We eliminated middlemen, made it very transparent, had a 10% carry only. So only when somebody makes money do they pay.
Right.
So that was TrueBeacon, which started about 2 years ago. It's still a reasonably small company,
Right.
but hopeful that it does well too.
Very interesting. Very interesting. But so going back to how you sort of bootstrapped and started Zerodha, it seems like you started it out of a need you were facing as a trader when you were, seeing these fees of 0.5% on every trade you were making. But how did and so I understand you get your brokerage license to sort of facilitate your trades. But how did you all transform from that to a pure tech solution, which today has both the cost side benefits, but then also user interface benefits, really having that vision of creating a platform, which I guess Robinhood was doing simultaneously in the US?
Yeah, very organically. For the first couple of years, we were not a tech play. We were a cost play. We were the cheapest person out there. We had a very generic software which any broker could offer. We had this guy who joined us called Kailash as our CTO, maybe like 2013, 2014. He built a tech team. We started building products in-house. I think between him developing the products and Nithin having a vision about what products we need, the tech play has kind of worked out very organically for us. Today, people come to us for the technology we have to offer versus the cost at which we're able to get people to transact. But like I said, Shivang, there was no plan. We're very like played by the ear kind of people. Like, the good thing about us is we're nimble. We don't have any investors and we don't have a board that we have to vet every decision by. We still operate like a small company, even though we have scaled. And I think that nimbleness and agility is what has worked for us in a way.
So did you ever have this vision from the start that we want to be an X size company catering to a Y client, or was your
No,
vision
no,
sort
no.
of a moving milestone that kept evolving as you kept hitting certain success marks?
Exactly. It kept evolving. It's still constantly evolving. We still don't know what we want to be. I mean, it's been long enough, but uh, there is no long-term plan.
Right.
I think we only make like 3-month plans or 6-month plans, uh, and then sorry, yeah, we only make like really short-term plans, and then things kind of like organically progress from there.
And would you say that that's something idiosyncratic to you, or would you say that's something you would recommend? A lot of us here are startup founders, and a lot of us here are aspiring to start companies right after we graduate. Some of us are probably already starting our companies. So is that something you would recommend, or do you think that that's something how it just worked out for you and not necessarily um, a way for other founders?
No, I think each one has to find the path that they have to work on. I don't think there is one fit all solution to any of these things. It worked for us. In another case, not having a plan, not having this, marketing model where you know how you're going to go out and acquire clients and stuff might not work out. So what worked for us worked at that point of time in our history. I don't think if we were to replicate what we did back then, we would be capable. I don't think any of us have the energy, but outside of that, even if we did, I think it would be very hard to replicate a company's journey in a business in a market cycle which is different.
Right, right. So Nikhil, also talking more about your bootstrapping journey, you mentioned that you never had a customer acquisition cost. In fact, made money when customers joined your platform. So was there ever a moment when you ran out of money? Even though you were sort of profitable and making revenues, but your sort of investment in your product required a lot more money. And did you then have that temptation to go out for VC funding or any sort of other equity funding?
So Shivang, luckily, no. We've kind of had like a good cycle in the markets in the last decade, not just in India, but globally, and we've ridden that up cycle. So we've never had that point where uh, we were wondering where salaries will be paid in the next quarter. I don't think that has happened. Maybe it used to happen pre 2012, 2011, like maybe 2007, 8, when we were managing money, we used to have those issues, but not in the last decade. I think we as a broker are representative of what is happening in the underlying market. And since markets have been rallying, we've kind of like grown with them. That being said, it has a flip side. If tomorrow markets were to correct and go into a bear run for 2 or 3 years, our profitability would go down significantly. The good thing we've done is, outside of not having any investors, we do not have any debt. We have never really raised any kind of capital to grow the business. So we're in that position of privilege that even if things don't work out tremendously well for a couple of years, we should be okay.
Yeah, makes sense. And Nikhil, you talk about timing. How important was timing in your entrepreneurial story? Do you think you would have seen the same success, say you started 5 years earlier, or say if you started 7, 8 years later, or maybe even today?
No, of course not. Timing is everything. Timing, not just in entrepreneurship, in relationships, in life. There are a million smarter, more hardworking people than me in the world, right? And compared to you and compared to anyone else. The reason why some people do well and some people do not is so much a factor of where we are and when we are there. And I think that's true for every domain.
And is there any advice you have for how you can make that luck work for you? Was there any
Well,
scouting? Yeah.
yeah, I think it pays tremendously to spend time, like whenever you graduate from college, when you figure out a problem that you want to solve, uh, to actually research the industry and figure out if that is the best industry to be from a 10-year outlook kind of thing. I think it helps tremendously. You don't want to ever be swimming against the tide. I think things become incrementally harder for you. So whatever you build, whatever job you get, it is so important to make sure it's an industry that you're very, very bullish about in the next 10 years. Think of it this way: if there is a certain stock you would buy in a certain sector,
Yeah.
if you're willing to bet all your money on that stock in that sector, find a job in that industry or start a business in that industry. Because if you have enough tailwind, likely you will do well.
Right, right. And around fintech, what would you say that is today? I mean, you have payments on one side. You of course have platforms that are enabling the retail trader. We'll get to blockchain and crypto later, but what would you say that is for you around fintech?
Yeah, so largely, I think fintech is a lending play. I mean, I might be wrong in the American ecosystem, but in India, what everybody seems to be doing is let's spend money, acquire a client, figure out a way to lend to that client,
Yeah.
and then figure out a way to profit from it. That's largely the game in town. I don't know how efficient or inefficient banks are at borrowing and lending. I think in many cases in India, the spread between the cost of capital and the cost at which they lend is very high.
Right.
Even if you were to factor in NPAs and delinquencies and all of that, banks are tremendously profitable here, as they are in the West. I think lending, when peer-to-peer opens up, if like you were kind of flirting with blockchain and DeFi and stuff like that, if something drastically changes there, I think it will become a big opportunity. If Shivang borrows money from Nikhil, or if Nikhil borrows from Shivang, and we don't need an intermediary, but if we get somebody to underwrite the money in between somehow, I think that will be a breakthrough.
Right.
Outside of lending, what else is happening? Fintechs in India, right? Penetration is abysmally low. It's like minute. Equity markets, 2%, 2.5%. So if we have 100 people, 2 people have had either direct or indirect exposure to equity markets in India. The flip side here is taxation on equity market is only 10%, long-term capital gain tax. Whereas taxes on running a business, running a corporation, any kind of other income in India is significantly higher. So the government wants to encourage it. And with the current inflation ecosystem, with interest rates going up, I think that 2% number will definitely go to 5% or 10%. It might not happen in this decade. It might happen in 20 years. But the cycle is good. So to build anything around stock markets, probably in India, probably a good idea. If you were to ask me about the US, because penetration is so much higher, I would say it's incrementally harder to be able to compete there because of how mature the industry is. And B, in terms of scope of growth, I would also presume will be lesser.
Right.
Yeah, so you have to take these larger bets, I guess. Like if you look at China stock markets have never done too well. We've had mirror exchanges in Hong Kong which people have traded on and stuff, but that's because of how the government is and how they're not truly capitalistic to a sense. But when that were to change, I think China will be the biggest opportunity in the world because they have very, very illiquid small stock markets compared to the size of China.
Right, right. And talking more about sort of this penetration in India, where you estimate that currently about 2% of the population has participated in the equity markets. This, I watched another interview of yours where you said that this sort of went up from 1% pre-COVID, and sort of COVID sort of did have that impact. But what do you think are some of the headwinds and tailwinds that are some of the headwinds, let's say, that are preventing the market from reaching some of the Western country levels of 40, 50%? And, as one of the main platforms that enables the mass retail investor to get into the markets, how are you sort of fighting these headwinds?
Yeah, I mean, there are many. One is taxation. I think derivatives in India, which is primarily our market, right? So if when you hear India stock market turnover 100, it means 85 to 90 out of that came through derivatives, which come by virtue of futures and options and derivative contracts, which are generally levered. Taxation there is still at your max rate. 43% in many cases. I don't think that makes sense.
Yeah.
We have a tax called STT, Security Transaction Tax. It's a tax which you pay whether you make money, do not make money when you buy and sell a share. That makes the impact cost very high, and it makes the markets less efficient. Our currency in India is not capital account convertible, it's more current account convertible. So the government allows you to kind of like buy dollars and kind of invest outside, but up to a certain point, and you have to take RBI's permission each time. Uh, Up until level playing field is created for Indian investors and foreign investors, the red tape is done away with, and taxation is rationalized, I would say the pace of growth would be smaller.
Yeah.
But were those issues to be dealt with and things open up a lot more, I think things would go incrementally better. Like, I'll give you my own example. If I have to buy into a really good company in America that I like, I have to do it within my LRS limit. So Indian government allows every citizen to take out $250,000 a year. Beyond that, if I want to take the ODI route, I have to go to the RBI and take permission. Those kind of inefficiencies make it harder for Indians to invest outside, and in return, kind of like make it harder for outsiders to come into India. I think that arbitrage between foreigners investing here and Indians investing here has to go away. When that goes away, the red tape goes away, the cost goes down by virtue of lower taxes. I think we'll have a much more robust ecosystem. See, the one good thing we have going for India is the age, right? Our average age, I think, as a country now is 28 or something, and we're at 8% official unemployment. So there are a lot of people who want a new vocation. There are a lot of young people who want a new vocation, and stuff around fintech and the financial ecosystem is a big opportunity.
Makes sense. Do you think there are questions around the Indian investors' mentality that are oftentimes preventing them from sort of entering the equity markets, whether it's high net worth individuals? I would imagine they sort of look at land and maybe even gold for the retail investor as safer bets, and the equity market has a bit of a perception issue. Do you think that's still there, or do you think that's evolving?
It's getting watched to a certain extent by virtue of the bull run we've witnessed. The longer the bull run, the more that image will get watched.
Right.
The problem in India is the country opened up in the 90s. So us, our parents, our grandparents, in many cases our great grandparents, have only seen one bull cycle, especially in real estate, right? Like, there have been no corrections. Like, you in America, you've seen what happened in 1929. You've seen what happened like World War I, World War II. You've had deep depressions and corrections. Even in 2008, you had a big correction in the real estate market. India has never seen that. We have never seen a correction in real estate. When that happens across generations, people tend to believe that it's impossible for real estate to correct. I think that's a very flawed narrative, especially today when things like the fertility rate in India are dropping as quickly as they are. Lesser number of people, same amount of land. You have to assume that the supply demand equation gets kind of skewed when that happens. So for those reasons, people are very, very fond of real estate in India. I wouldn't be wrong if I were to say more than 50-60% of household savings above a certain class sit in real estate. And it's a very comfortable place to sit in India because property taxes are negligible, unlike America again. You might be living in a really expensive state and pay like 1% property tax, but here there's nothing. So outside of retail money sitting there, a lot of money on which tax has not been paid also ends up there.
Right.
So real estate has always been popular. Gold is popular not from an investment standpoint only, but from a jewelry standpoint.
Yeah.
Yeah.
Right.
Yeah. So India has no gold. We import all of our gold, and we've probably imported something like $500 billion of gold in the last few years, which is $500 billion, right? The government doesn't like it. It's really bad for our trade deficit, and it's like putting a pressure on our reserves and stuff like that. So they constantly try and discourage people from buying gold.
Yeah.
Started something called the sovereign gold bonds, the Indian government, where they give you, outside of the price appreciation in gold, they give you a fixed 2.5%. Uh, so they're really trying people to move away from buying physical gold and buy their gold bonds instead.
Yeah.
So gold and real estate, for those reasons, culturally have been very popular in India.
Yeah.
Most people have immense amounts of land and jewelry, and
Right.
they feel safe with the assets being there. It's changing, but changing very slowly.
Slowly. And so, Nikhil, now that we talk about gold, we must talk about the digital world's gold, Bitcoin. And you really have seen equity markets sort of become mass movements in the US, right? You saw that with the GameStop and the AMC share prices. You in the US, you sort of had Robinhood face legal ramifications around freezing these shares. But another big sort of mass movement that has been driven by social media is NFTs and cryptocurrencies, whether it's interesting NFTs of apes or cryptocurrencies that are meme coins, completely blowing up in value. This has definitely been a way for people to make quick money. What is your view on crypto as an asset class? Have you invested in it? And what's your take on this?
Well, I haven't invested in it. Personally, this is a complicated question. Like, I have not invested in it primarily because we're so we're regulated by every regulatory body in India. They don't like it. So we can't even think of investing in it until they say it's kosher and that, you should do it. Uh, Logically, it makes sense for us because we have the same captive audience which buys equity, crypto, and different kind of assets on our platform. So it'll be easy for us to plug in crypto where they're already trading other stuff. Uh, that being said, uh, how do I explain my opinion in a precise manner?
And I guess let me make it easier for you. Let's not talk about blockchain technology and Web3 and metaverse. That's the tech. Let's not talk about Nikhil, the tech investor. Let's talk about crypto as purely a tradable asset class.
Yeah, I don't know how to research it. Like, honestly, when I'm buying a stock, I can look at who the management is, what are their earnings. I can look at where the sector is going, where the demand might lie. The only way for me to probably gauge crypto fundamentals is probably to look at how much money the Federal Reserve is printing. Like, I feel like the more money they print, the more the use case for crypto is. Or like geopolitical issues, if something were to happen tomorrow, if this Russia Ukraine thing scales up, maybe crypto becomes more relevant. uh, Even then, I ask myself, will we move to a world where I think it's a pity that we moved away from currencies which had gold backing them onto fiat currencies. I know, I mean, where you sit today, America is, is probably the protagonist of this story, like from the Bretton Woods time to the gold standard to Richard Nixon kind of moving away from the gold standard. I wish it hadn't happened. I don't think countries which spend more money than they earn can do it forever. I feel like there are larger 100, 200-year cycles, and then it turns. Right now, you're probably at peak cycle, right? Yeah, printing money right now has become insane in America, right? It
Yeah.
printed like, I don't know, like 11, $15 trillion in like the last 2 years or something. For those reasons, I believe there is a use case for some kind of a cryptocurrency. I think it has to move away from things like Bitcoin, which work on your proof of work kind of thing, where the cost of verifying, the cost of having the privilege to verify a transaction is too high. If you leave proof of work and you go to proof of stake, again, somehow it's not getting to that point where transacting is becoming effortless and costless. People are talking about proof of history now. Uh, at some point in the future, will there be a cryptocurrency with a finite number, maybe in some way backed by something, and where the cost of transaction is next to zilch? And will that have scope? Maybe. But in its current form, I look at pragmatically what's happening. Uh, uh, I look at people who are actually transacting in cryptocurrencies today. I don't mean the small retail trader who's, going onto one of these platforms, losing 1% in impact, paying his broker 0.5%. I mean, those guys, it's impossible for them to make money, right? The odds are stacked against them if you were to give them a 5-10 year period. But I'm talking about the larger crypto investors who are actually transacting using it. In my own experience, a vast majority of that, it seems like it is money moving from highly taxed locations to lax tax locations. And I don't think central banks and governments across the world will allow that for too long. For America, I think it's a great hedge. I think we did some research, and I think something like 85% of the world's Bitcoin is either owned by America or held in America. So for somebody like America, where at some point in the future there might be a contest on the dollar, I think, to have the alternate currency also sit in the country is a good idea, right?
Right.
So
from
it's
those
a very complicated thing to give like a yes or no answer to.
Absolutely. Yeah, that makes sense. And talking about this space more as, let's say, a startup investor, right, where you are seeing today DeFi become DeFi gain currency, you're seeing Web3 hold potentials for various industries to become a lot more democratic and a lot more easy to access for a broader audience, right? From that perspective, what do you think blockchain and Web3 and the metaverse have in store for us? And also, I'd like to add, how are you looking at these spaces as the founder of Zerodha and TrueBeacon?
Well, I think it'll be interesting to watch. I think I've seen some experiments which have scaled well. As Zerodha, as a stockbroker in India, like I said earlier, why I don't do Bitcoins is until the government gives you their blessing, until they say this is totally kosher, we can't enter these domains. And right now they haven't. So up until they do, we would probably stay away from it.
Interesting. Very interesting. Nikhil, I do want to also talk a little more about what you all are doing at TrueBeacon. So as opposed to Zerodha, where you were catering to the retail investor, at TrueBeacon, you seem to be catering to the complete opposite end of the spectrum, the ultra high net worth investor. So what are some learnings from Zerodha, which had a very different investment investor profile, that transfer onto TrueBeacon? And I guess what are some similarities between both these two products, even though the clientele is very different?
The ethos very much remain the same. We're trying to be the cheapest, most efficient player. Like I'll give you an example. Like if you were an American and you want to invest in India, you're an American billionaire or millionaire or whatever. Up until now, if you wanted to invest, say, $100 million, you would go to your private bank, your wealth manager, say, I want India exposure. It's this new booming economy. And you want like blue chip exposure, no small cap, mid cap, and in a very efficient manner. Today's environment, you would pay 2% to your private bank or wealth manager. So your 100 has become 98. You would pay $2 more to your wealth manager, to your fund manager, whether he makes you money or does not make you money. So your 100 has become 96. And then you would pay, like things like brokerage fees, and you would not have transparency in terms of what the NAV is every day. And you would not be able to take out your money when you want. There would be a 2-year lock-in, a 3-year lock-in. So we've eliminated all of that. So when you, as an American coming into India, come in with 100 or even with $100,000, all of that goes into quality blue chip large cap companies in India. It's well managed by our team of fund managers, totally transparent, where you can see your NAV on a live basis. You can add money when you like, when you can take out money when you like. I think the use case for something like that is tremendous. But we're doing it in the slow, organic manner. We're relying on one happy client to talk to another happy client and recommend it. So I suspect the scale of growth would be, it would be like really long winded and it'll take a long time for it to scale.
Right.
But I think the use case definitely is there. It happened to me, a few years ago. I was trying to put some of my money into a fund, and I dealt with the same nonsense, and hence we decided to be.
Interesting. And so in that sense, True Beacon is really the Zerodha for alternative, investments and high net
For
worth.
extremely, for billionaires. It's like
Yeah.
Zerodha for billionaires who want their money managed.
Is it only for billionaires or can millionaires also?
No, millionaires and billionaires. We try to keep it as niche
Okay.
as possible. We typical client relationship would be at least like $2 million.
Okay.
So they tend to be, if you have a spare 2 million to invest into India, these are people who are worth, like 100 mil or something like that, at least.
Right.
But what it also gives them is an opportunity to network with people like that. It becomes like a membership club.
Interesting.
Uh,
Interesting. So
yeah.
talk more about this, I guess, this broader vision out of just an AIF, out of an alternative investment fund. What's your broader vision for True Beacon?
I think to become a private bank, it'd be more efficient than any other private bank out there. See,
Interesting.
we've created this community of 400 ultra HNIs, whose money we manage,
Yeah.
but we also try and get them to kind of like interact with each other, help their holding companies grow. Say again, I'll take your American example. Say you're an American guy who wants India exposure. First, you come in through the fund, your money is managed efficiently. Then you want, say you're in the IT space. Let's say you want to meet the relevant people in India. Very likely that other clients on the platform would be, like the promoters of large listed IT companies in India. So you kind of like avoid the middleman for any business that you might be doing by virtue of becoming a member of True Beacon. And I think that has a very relevant use case for many people.
Yeah. And so, given that you're targeting the millionaires or let's say even the 100 millionaires, the age group is probably different. But what about for people of my age or young adults like you who haven't made it as big in life as you? Do you have any vision for them, creating a network around them, creating a network around startup founders, around incubation and things like that?
No, startup founders, see, all the unicorn founders, most of them in India are our clients. So it's a very tiny ecosystem. Like, you hear in the news that, India has 50 new unicorns this year or 100 new unicorns this year. But the relevant ones in that, they predominantly tend to be in Bangalore. And in most cases, you're probably friends with 80% of them. And we all hang out and we talk to each other and stuff like that. So it's a very tight network, and if you guys, depending on what you're starting tomorrow, if you're starting your own venture, you're starting your startup, if you need the right kind of connections, and if it's a company that I can really get excited by, I'm happy to connect you guys to the relevant people.
Very cool. Very cool. Nikhil, I'd also like to take some of your time in getting some investment advice for us, for myself, and then everyone else in my boat in the call today. So, how would you? A lot of people my age who are graduating either out of college or probably have been working for a few years, have some savings. They really don't know how to create wealth in the sense of how to start investing. They don't know where to start. What's your advice for them? How should they approach allocating their wealth to investing?
To begin with, keep things really simple, as simple as possible. uh, Keep an allocation in between, say, depending on the corpus, keep some fixed income, keep some gold, keep some equity. uh, in the equity, I would say, like, stick to blue chips. Do not go to the smaller companies where you punt in a way. uh, it's more about when you invest. versus what you invest in. Just being candid here, I think we are sitting on a precipice in most markets across the world today. If you're starting your investment journey today, I would personally recommend going for hedged products. Don't take vanilla market risk. Maybe have a higher component of gold or fixed income starting off now. Uh, I would have said a completely different thing if you asked me this question 5 years ago, and I'll probably say a completely different thing 2 years from now. But at this point in time, across the world, I feel like assets across the board are overpriced. So I would generally recommend err on the side of caution and don't. I don't think this is the year to take risky bets.
Right. Got it. And so if you would that mean translate to holding on to cash, or would that translate to just investing in
Yeah.
safe assets?
Cash is again a bad idea because like say for America, say you guys are reporting inflation of 5-6%, and these numbers are never accurate, right? Like whatever the government says, you have to take with a pinch of salt. Not just your government, but governments across the world. So if you were to pragmatically think that inflation is closer to 8, 9, 10%, if you leave your money in cash and the amount of money America has printed, I think that's like a terrible idea. You would be better off probably keeping it in a uh, risk-free form of debt,
Yeah.
something with a sovereign guarantee. Maybe like split it between 5 countries and buy sovereign debt of A, B, C, D, and F, and make sure you're in both blocks. One block which is the Western bloc right now, and the new block which seems to be forming in Asia, right? Like China and Russia and stuff like that. Chinese equity prices, because of the government crackdown, are actually very attractive right now. I think there is plenty of opportunity there. It's just that the conduit, the means of investing is hard. But I think China is a big opportunity again in terms of valuation to scale of companies.
Got it. Interesting. A lot of us here are starting our companies. What is one sort of piece of feedback you have? I saw the Humans of Bombay post where you talk about, I think, stupid faith. And I found that very compelling. But, what are your sort of pearls of wisdom?
Yeah, so when I was younger, I kept looking for somebody. I kept kind of like fantasizing about these people I've not met, like these really prominent businessmen and billionaires and stuff like that. And I thought like I should find a mentor like that and stuff like that. Like 15 years down the line, I've been doing trading full time for 17, 18 years now. Now that I know a lot of them, you come to realize that nobody's special. Everybody has gotten lucky in one way or another, or they've utilized the loophole that they've found. And every single person is like that. You will never lose out in business because somebody's intellect is far superior than yours, or the amount of hard work they're doing is significantly more than yours. You will lose out in business and not do well if you don't identify underlying trends and you don't identify which industry is going to do well in the future. So I think, like I said earlier in this conversation as well, pay a lot of attention to what industry, what sector that you're going to specifically work in. It makes it's probably more relevant than who you are, how skilled you are, and how much money you're starting with, the industry that you pick.
Let the sector work hard for you while you work hard. Yeah. Makes a lot of sense. Nikhil, we have like a long list of questions, so I don't know if we'll be able to get to all.
Yeah, we can maybe go to that right away.
Yeah, so let's get to some of the questions. They've also been voted upon, so I'll start with some of the top voted questions. So this is an interesting question where one of the audience members asked, how do you deal with attention, positive or negative, that comes your way as one of the youngest successes in the space? And how's your approach towards this changed over the years?
It's good and it's annoying. The negative attention, see, when you get positive attention, you get it in spurts, right? Like you get like tiny bits. But when you get negative attention, it's like a tsunami which comes your way, and you're kind of like intimidated by it.
Yeah.
But I think you kind of like benefit from these bruises. Each time some negative bad thing happens, you become less. I don't know. There's this guy called Talib. I don't know if you guys have read about this guy, Nassim Nicholas Talib. He has a book called Anti-Fragile. So he talks about how you become less fragile when these negative things keep happening in your life. So much like that, I think the fact that all these negative things have happened, I'm stronger. And today, when it happens, uh, it would not take away as much mind space as it did 1 year ago, 5 years ago, whatever. I think that's how you kind of like deal with negative stuff. I've always I've always fantasized being able to compartmentalize 100%. Like I want to be able one day, uh, if I have 5 things going on in my head, 3 things are terrible and 2 things are good. I want to like segregate 4 of them away and focus on one thing and not let my mind drift. It's easier said than done. I think it's one of the hardest things, but it's more in lines of uh, uh, I don't know. In a way, you could say being stoic in a way, or nihilism in a way. I think they all come together if you're truly able to compartmentalize. But yeah, like that. I think the bad things, you get used to it, and then progressively you feel less bad when bad things happen. Uh, the good things, honestly, like I'm a fairly insecure person, and when something really good happens for too long, I'm like, logically the odds are in my against my favor, and something bad should happen now. So I start worrying about that. So the good affects me in a manner worse than the bad affects me. Because when something bad happens, I'm like, okay, fine, this is probably the worst of it. But when something good happens, my mind goes to, okay, something bad is coming around the corner.
But besides that, can positive attention be harmful? Have you seen that?
It depends on where in the world you are.
Okay.
In India, attention is bad, especially in my industry. I think it doesn't work in your favor. Maybe we needed it at one point of time because we don't do any marketing, and our marketing in a way was all the free press which was coming our way. But I think it brings more bad than good with it.
Okay. Got it. And is there any readings or any sort of practices you follow to guide your stoicism, or is it sort of self-prescribed?
I don't even know if it's stoicism. It's just like, what I try to do. I'm 8 out of 10 times unsuccessful at being truly like stoic and not letting things affect me. But it's a constant endeavor. Like it keeps changing. Like every 2 months, I'm thinking something else. Like, off late I was reading about Buddhism, and it said, like the thing which I took away from it is like, if you have no desire and no attachment, you're happier in life. So now I keep kind of like telling myself, no desire, no attachment. It could be a romantic relationship, it could be a financial relationship, it could be a professional thing where you're competitive with someone for. Each time I'm feeling a little bit like iffy about something, I say no desire, no attachment, and it helps. And like 6 months ago, maybe I was reading. There's this guy called René Girard. He's a French philosopher. He talks about we don't want anything, nor do we know what we want. He talks about something called mimetic theory, where I think I want what I want based on what I've seen people get. So if I think Shivang wants a certain thing, and I hang out with Shivang enough, then I want that thing. So, 6 months before that was something else. Six months before that was something else. It's just like a constant cycle.
But it's very important to keep yourself, I guess, philosophically as well as spiritually connected. Another question that has come up is, so when you were starting young, did you ever feel, or did you ever think or plan for a scenario where you could fail? And did you have a plan B? And if so, what was it?
See, plan B is a privilege, right? Plan B comes with money and access and all of that.
Yeah.
So when you're young, plan B is, go find a job somewhere, right? I mean, essentially that is plan B. Now in life, luckily, there are plan Bs. But that too, when things go wrong, the one thing I've learned in life is when things go wrong, everything goddamn goes wrong, right? Like, so all your plan B, C, D, E, F, they tend to fail together with your plan A when they do fail. But when I was younger, no. Younger plan B was, okay, go to a call center and join a job again, or like do something like that. See, the thing is, since I don't have a formal education, it's not very easy for me to even get a job. Like if I were to think about it practically,
Yeah.
like today, if I fail in business and if I have to go apply for a job somewhere, like, trading is not, mm, trading the way I trade has evolved. Things have become a lot more systematic. I don't think anybody would hire me and pay me tremendous amounts of money to trade. So if you strip that away, the other thing I have is, like I don't have a high school degree, and I'll have to apply for the most basic of jobs. So it's just like how life is, right? Like you have to be okay with it. Right now, I have some plan B, and in my mind, in my own thoughts, I have to be okay with it.
Yeah, and I think going back to your post, if you think too much about your plan B, you start getting scared about doing some things. And so you sometimes just have to have that blind faith, to the stupid faith that things are going to work out, and you just have to take that jump. And I think for you, the jumps were rather radical, whether it was dropping out of school, leaving your call center job, starting the Zerodha. So definitely.
Yeah, now I'm thinking like, I'm 35.
Yeah.
Average age in India is 70. So I'm like, I have 35 years left. I've had a good 35 years. What is the worst that can happen? Even if I have like another 3-4 good years and then I have 5 terrible ones, net, I should still be happy. And I should have some gratitude for the 40 good ones I've had in 5 years if something goes bad.
And for your remaining 35 years, do you think you have the same sort of drive, hunger you had?
Not at all. Not at all. No, I'm not content, nor am I hungry. It's a very weird situation to be in. Like, I wish I were more content. I'm just less ambitious. I don't think I have the energy to start something afresh today. Even if I did, I would be I would so not be competitive versus you guys, and like the fresh blood coming out of all these, like great institutions and with so much more drive and ambition. Because I just don't have the energy. Like my goals now are, things like I want to like go to the gym 7 days a week, or I want to like eat this, or like I have like more, I want to sleep for 8 hours a day. Like those have become more my goals today.
And I think those are also, I think it's how you define happiness, and those can very much be part of that definition. Nikhil, I know we are at the 11:30 mark. There are a few more questions. Do you mind staying on for a few more minutes, or?
Yeah, we can do like 5 more minutes.
Yeah, let's do that. So another question that's come up is the value created in the Indian markets over the last 10 years is staggering. Yet social indices of growth, unemployment, and poverty have not caught up. So what are your thoughts on this? And I think if I had to add something more to this, can you tell us more about how you're giving back?
Yeah, sure. No, see, wealth disparity is a problem across the world. If you go back in time and you look at history, if a society had 100 people and 25 people had 90% of the wealth of that community, is okay. If 15 people had it, is okay. If 10 people had it, is okay. But if it gets to the point where 3 people have everything that belongs to the 100 people, historically there have been revolutions, right? Like people take sickles and go after the king, and there have been coups and armies take over governments. The world is definitely heading in that direction. And I think these are cycles. At this point in the cycle, I think the only way for the world to prolong it is kind of like, socialism doesn't work, communism doesn't work. I think some form of really benevolent capitalism can work. So it's not me being altruistic in a way, but I think for the people who have done well and gotten lucky, it's probably more important for us to give back. Because if we don't give back, we don't get to retain what we have for too much longer, because we seem to be peaking in that cycle. So yeah, many issues across the world, as in India. I think I went to California recently and I saw the number of homeless people there. I think this is an issue which transcends like countries across the world today, right? So people have to, like, the ones who have gotten lucky have to consciously come to the realization that if they don't share, they don't get to keep whatever has made them lucky, or they don't continue to remain lucky for too long. And then I think that that trend will change.
Right. And I know you have sort of indicated you want to donate 25% of your wealth to philanthropic causes. How are you motivating your peers to follow your footsteps? In the US, you have people like Bill Gates and Warren Buffett stake similar pledges. But how are you motivating others to follow your footsteps, given that people do have legacy? You know, there's a big concept of legacy in India, that I want to pass on things to my next generation and so on. So how are you breaking that mindset?
I think it's the stupidest thing ever, this legacy that, I want my great grandson to benefit from what I've done. It logically makes no sense whatsoever. So Bill and Melinda Gates Foundation, we do a lot of work with them. We're right now working on a project where we're upskilling about 200 government schools in Karnataka. They're paying half of it. We're paying half of it through a foundation I have called YIPP, Young India Philanthropy Pledge. So interesting stuff. At Zerodha, we have something called Rain Matter Climate. So we gave about $100 million of personal money towards climate change and climate change related causes, because when you spend time with the Bill and Melinda Gates people, right, they do a lot of stuff like, around nutrition and this and that. The one thing which stands out about them is they care more about the disease and less about the symptoms. And climate change is probably going to be one of those things where it will be the disease. So it will cause displacement and floods and droughts and starvation and all of that. But the idea for us, what we're trying to inculcate, is not to go after the symptoms, but try to make a difference to the disease.
Very pertinent. Yes. So, Nikhil, I'll ask my one last question. This is received the most number of votes. Seems like a very important question, so we must ask this. So, one of the audience members sees a book behind you, and they are asking, what are you reading right now?
I'm reading Dostoevsky because I feel like it's the best, most relevant way to learn about Russia and Ukraine.
And I guess, what have you taken away so far?
See, this is where I am. I started it like 2 days ago.
Okay.
But it generally, I think Russia, like, I feel like we always get one narrative in the media, right? Like, whoever is in power gets to rule the narrative. Like what you were saying earlier, right? History is, yeah. So I think
the winner's story is history, of course.
Correct. So they might be wrong and they might be the most terrible people in the world, but I think it's all the more apt today to question who they are today and why they got to be that way. And I think Russian history and Russian evolution is very interesting in its own way. So I'm trying to figure out how Russia's culture is, because at the end of the day, we're all people, right? Like, we're often told somebody in another country is a mad person and he's this brute and he's like, he wants to kill this country and eliminate it for no reason whatsoever.
Right.
Most often when you look below the layers, that does not tend to be true. So I'm reading a lot of Dostoevsky now because I'm like, let's learn more about Russia.
Let's understand what's motivating Russia's behavior. Very interesting, Nikhil. Well, I think we've definitely taken more of your time than we'd asked for. So we must end the chat here. Nikhil, thank you so much for taking our time to talk with us. There was a lot of excitement around campus about you coming. Your story is super captivating. I hope the wisdom sort of you gave us has helped others today. So thank you so much.
Thank you. Thank you. Lovely chatting with you, and hope we all can meet in person at some point.
Absolutely. Absolutely. Please let us know if you're ever in the Cambridge or Boston area.
Yeah. I'm in the US end of April. Maybe I'll hit you.
Okay. Yeah, please do. I'll touch base with you offline. Thank you.
Super. Thank you, Shivang.
Thanks.
Good night.
Bye.
Bye.